I find that some of the best traders are ones who are able to remove themselves from this desire to be intellectual and rational and instead step back, look at behavior and people's psyche. It doesn't matter whether we think it's right or wrong. It's about what people perceive as value. I also understand it's almost impossible to predict how that balloon inflates. And so as people navigating this world of finance, you sort of have to play with that uncertainty, that messiness, create wealth portfolios that can straddle it. People tend to think they're very rational when they're chasing return, but honestly, some of the best traders, the best investors understand human behavior.
Hello and welcome to another episode of Ways to Wealth. Today I'm joined by Sid. Sid, why don't you give us the TLDR on who you are and what you're working on?
Great, thanks, Charlie. Yeah, happy to be here. I'm fascinated by and very energized by economics or designs for wealth and how they interact with and even shape and mold society. And so my experience has taken me to the more traditional end. I ran one of the largest trading desks in South Asia. Then spent some time in a community that was focused on decentralized and Gandhian economics. Spent a few years building my own practice as a licensed financial advisor, and
Is
from
that in
there
New
also
Zealand or
that was in India, and
in
from
India? Yeah.
there was very interested in the wave of Web3 and peer-to-peer technology and what it proposed, and I look at that as like as a long arc, like a long-term project,
Right.
and that took me to Singapore and now to New Zealand, where my work with neighborhoods has involved creating infrastructure for more distributed finance. Yeah, so you could say one of those people that straddle all both ends of the spectrum with regards to
Mm,
economics and money and wealth.
yeah,
Yeah.
for sure. Yeah, interesting stuff. So you're a Edmund Hillary Fellow.
Mm-hmm. Yeah.
What was the catalyst like? So it was what was the real appeal, or what kind of really was the final catalyst that got you here from Singapore of all places as well prior?
Yeah. Well, a big motivating factor was my wife is Kiwi, and so we had
Okay.
two COVID babies, and that prompted questions around where we'd like to be in the long term. We could also see the winds of change, like a move away
Yeah.
from globalization, and New Zealand was on the cards to be closer to a family.
Yeah.
The Edmund Hillary Fellowship, is a very interesting program that invites systemic thinkers and change makers, entrepreneurs, investors from around the
Hmm.
world to use New Zealand as a base camp for change.
Mm.
And that, so yeah, you could say the fellowship has been a landing strip of sorts for us in entering and integrating with this ecosystem.
Yeah, okay, cool.
Yeah.
Um, so what got you into like economics and what grew your fascination with economics?
Um, I guess I mean I like the definition, the root of the word economics, oikos nomos, which literally means rules of the house, and I've always looked at economics in through that lens
Mm.
as some form of technology and culture that shapes the way we interact. And so my formative years in India were when India moved from largely communal slash socialist regime, and the sweeping wave of neoliberalism came in the 90s. And that was pretty formative for me because, in those years, it was a drastic shift in the way I
Mm.
perceived economics, how it shaped our identities, multiple languages, different cultures, and here was, a pretty homogeneous economic system that was presented to us as a way of prosperity, right? And so looking back, I feel like that seemed really interesting to me, and through the years, more conventional finance on the trading desk, more more longer term thinking with peer-to-peer communitarian finance. That to me has always felt interesting, almost like this shaping force or infrastructure that that interacts with that are people with people who reside in that house and almost shape how they interact with each other, see each other, coordinate with each other. And so I guess I've always had opinions about what that infrastructure should look like,
Mm,
particularly because we're transitioning from a 20th century civilization to a 21st century society, moving from industrial era systems towards more informational era systems, and that seems really critical to where we are poised as a group, and I mean us as a whole living on this planet. So yeah, you could say that's been a motivating factor for me.
mm. And or you've worked within organizations, and you've been working your own entrepreneurial
Hmm.
endeavors. Like, were you aware and very keen on building equity and having that kind of autonomy early? Was there a kind of early kind of moment where you're like, that's me, or was it kind of second nature and maybe influenced by kind of your existing family dynamics?
I would say extremely mixed and always living in that paradox. And you could say
Mm,
that mix between like being an asset owner and being a good wage laborer. And you could, and perhaps it came from my parents, like they come from distinctly different parts of India, distinct culturally. My mom's side is more
mm,
entrepreneurial, my dad's side is more academic and intellectual,
right.
more sarcastic. And so, that side of the family is always looked at failure with a pretty harsh lens, whereas my mom's side tends to be more garrulous and expansive in their thinking. And so you could say
Mm,
there's it's almost like a polarity within me, with those two aspects. And so in that entrepreneurial spectrum, you could say I tend to gravitate towards more intellectual ventures, and
mm,
that are more oriented towards design, often gravitate towards systems design, but at the same time, I enjoy having intellectual, intricate conversations with people that I work with. So even as a financial
mm,
advisor, I tended to attract individuals who looked at the economy, looked at financial systems around them, and had questions. And because
mm,
of my background, like growing up in late 80s, 90s India, there's seems to be a strong pragmatism to it, in the sense of things can go sideways very easily. And how do you have one leg firmly rooted in the certain, but the other leg exploring the unknown? That to me feels like where
mm.
growth occurs, and that I'm honestly excited by. Either end, like if you're just rooted in the certain or rooted in the uncertain, tends to be um, less fulfilling, if I were to put it that way.
Yeah, for sure. Um, did like what do you think the role, in a new world or a growing dynamic of passive flows into
Mm,
predominantly beta portfolios to outrun inflation? Obviously, you can create your own tilts, and lots of people are doing that these days. But ultimately, you have a more of a kind of constant tap of flow going into specific indexes, etc. And then, you have something like a trading desk. Where do you feel like the concept of a trading desk comes into someone's thoughts around their portfolio construction, right? So we've got different
mm,
buckets of different assets with different liquidity profiles, different dynamics, different effort to hold
mm,
them,
mm,
different costs to hold them. Um, and there is still very much so, especially in the high end space, family offices, ultra high net worths, um, investment banks. There is still the trading desk still exists,
mm. Yeah, yeah.
and for most people, it's impractical. But of course, you know it it's available in areas, and it's still alive and kicking.
Mm. Yeah, I would say working on a trading desk was pretty humbling, not because I saw intricate rocket science, but because I sort of realized, just how emotional everything was. There's this
Mm,
popular Keynesian quote: "Markets can remain irrational longer than you can remain solvent." And that was, day one. That's sort of like a real, a reality check. You might have your opinions on what's rational or what's truth, but honestly, markets can outlive your rationality. And so I tend to think of markets, trading desks, flows of capital largely as abstraction of human behavior, um, almost like aggregations
mm,
of fear and greed. And I find that some of the best traders are ones who are able to remove themselves from this, desire to be, intellectual and rational, and instead, step back, um, and look at human behavior and people's psyche. And so, to your question of, money flowing into indexes and pretty simple instruments. It doesn't matter, whether we
exactly.
think it's right or wrong. It's about what people perceive as value. Um, I've often found my work with financial advisory, people tend to think they're very rational when they're chasing return, but honestly, some of the best
Mm,
traders, the best investors understand human behavior. Um, and and so as a trader, that's what I've learned, to almost look at your ideology or rationality with that objective lens. And so I absolutely, understand and agree with a lot of the comments out there around, money just flowing into index funds, or money being printed, and this balloon is unsustainable. Um,
mm,
but I also understand it's almost impossible to predict how that balloon inflates. And so, as people navigating this world of finance, you sort of have to play with that uncertainty, that messiness, and create wealth portfolios that can straddle it. And
yeah.
that to me is always been interesting.
Yeah, for sure. I think it's like a kind of duality, right? Like around a number of different points, but like typically it's hey, know the race you're racing, and know the
Mm,
race that the part of your portfolio that is whatever it is, whether it be a property portfolio that's getting yield, whether it be your own business that you're
mm-hmm,
operating,
mm-hmm,
whether it be a beta index of
mm,
some description, or it may be, a concentrated equity portfolio, but it all has a different purpose.
mm,
And one thing I found interesting when I really got into markets, I started researching how different disciplines were executed. Right, I always
mm,
had this kind of idea that perhaps you could learn from different wisdoms. You know,
mm, mm-hmm.
um, but what you find is when you go deep into those different practitioners, is they're almost religions within
Yeah.
their own little like their own little
With the mechas
thing.
as well. Yeah.
Yeah,
Yeah.
for sure. So, um, and I definitely think that like my experience in markets has been there's
Mm,
especially when you're a systems thinker or you're an intellectual, you
mm,
get seduced by the idea of being right.
yeah.
Whereas actually, you're in the market, if you're in a trading desk, especially if you're trying to
Mm,
generate basically
mm,
trading returns, which is very much like, hey, you're actually trading apples, as in
mm,
like,
mm,
fruit, right? Like you're actually
yeah.
there to get a return. If you're in an index portfolio or you're in a concentrated equity portfolio, you're
Mm-hmm.
there to compound your equity
Mm-hmm.
returns over time. You're not thinking about movement.
Mm, yeah.
But I think that a lot of people, especially now that retail has got so much more access to just general information and actually quite advanced, interesting information,
Mm-hmm.
um, there needs to be more of a kind of education around. Well, your portfolio has different portions. Don't think you're an investor if you're trading.
Mm,
You're doing. You're actually executing on an open and closing of a trade.
mm,
Multiple trades in a fortnight period, because
yeah.
that the game you're playing there is trading. Like that
Yeah.
is the game you're
Yeah.
playing. You're not
Yeah.
investing, and
Yeah.
I think that's the interesting thing, I guess, around specialization, right? Is when you
Mm,
specialize, you get to at least be focused on what that component is
mm,
doing.
mm-hmm.
But then you've got the Ray Dalio side of things where he goes, "Hey, you need basically 15 uncorrelated streams of equity slash income." And how does how does the average
Mm,
person do that? It might not even be appropriate for
mm,
someone that's trying to get established to do that, because they really need to focus on going from 0 to 1. They need to get
yeah,
ahead in something.
yeah.
So, as in this ever adjusting world, what do you think? Yeah, how do you think people should really be approaching that kind of
Mm,
dynamic, right, between this kind of
yeah.
idea of diversification, right, and being prudent, which is
Mm,
appropriate and makes sense,
mm,
with the age and stage and where you're at?
yeah. Yeah, I think the word you used, one of the words you used was dynamic in there, and we are in dynamic times, particularly because I think it's an era shift. Like I mentioned before, from industrial to informational era systems. And it's not one, honestly, that has been covered in the last 60 to 70 years of finance. Like, we've lived in a relatively stable environment. And so we're now talking about systems where you're seeing massive currency fluctuations that underlie these
Mm.
assets. Um, so if you're based in New Zealand, you have to be thinking about what currencies underlie your
You want to hold,
assets,
yeah,
because your consumption patterns aren't just based on the New Zealand dollar anymore. Like, a big chunk of Kiwis import heavily. A lot of our consumption patterns are steered that way.
it, are in US dollars, right?
Yeah, and so we're
Like
not.
I've
Yeah,
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 I
and so
talk
we're
about this so much.
yeah, so we're not in the 1950s anymore. You're looking at patterns where, traditionally you had the Warren Buffetts of the world talk about long term, the benefits of long term investing. I think it's a fantastic philosophy. I think it worked in the 1950s and 60s, and the period, the decades after as well. Particularly because we live in an era dominated by TikTok, right? Like things
Mm.
change. Um, we could be entering phenomenal geopolitical uncertainty. You're looking at times where populations are aging, demographics are changing, and so one of the more important metrics I've used in the past is that of fungibility, or the access of, what percentage of your portfolio can actually be extracted from what it currently resides in, and provide for your needs if something arises. And so, apart from your traditional asset allocation dashboards, like, I've been a big fan of things like what currency exposures you have, what fungibility
Yeah,
exists
for
in these
sure.
assets. And so, in that regard, index funds, as as simple and homogeneous as they might be, I think tick a lot of boxes. So I'm not, averse to the function they play in people's lives, and so can be used very skillfully. I think these are, you're also entering paradigms where you could be a strong institution generating cash flows, but there's a new technology that emerges which creates institutions and companies that have totally different cost structures, and so you could see media
Yeah.
with their tens of thousands of employees or hundreds of thousands of employees disrupted by a Facebook which has 15,000 employees, and you're now entering an era where that media might be disrupted by large language models that might have hundreds of employees. And so, again, like, and this to me marks the shift towards the informational era where even traditional accounting and balance sheets may not be as good a read of a company's cost structure or their ability to generate profits. Like, if you look at a project like Ethereum, and its market cap
Mm.
at how many hundreds of billions, and their cost structure, they probably have like a few dozen people developing their open source software, right? And so that's like the other end of the spectrum where you have new projects coming in that could potentially disrupt most of traditional finance with close to no costs. So I do think in that sense we're looking at a transitional period, and so the importance of creating transitional portfolios feels really critical, which means
Mm.
an understanding of what factors like underlying currency risk, fungibility, what your consumption patterns are,
Yeah.
and
How much
how
is your spending
technological terms.
exposed to US dollars, for
Yeah,
example?
yeah. I would argue that the average person probably sits at like 50% of their
Yeah,
consumption.
for sure.
Um,
For
and
sure.
with
And what does
and
that
that's
mean for
pretty
your
huge chunk.
currency exposure then when you save, right? Like,
Yeah,
how much
yeah,
are you saving in both? How are you protecting
yeah, yeah.
your buying power? Will this relationship between the US dollar and New Zealand dollar continue, where
Mm,
the New Zealand dollar is basically a subservient entity to the US dollar?
mm,
So even when the US dollar kind of gets weaker, you may
mm.
even see New Zealand dollar getting weaker still against it.
Yeah,
Um,
yeah.
and
So
obviously, we've
it's like a race to the bottom, right? Like, as you know, there's a lot of talk about the USD depreciating, but there are heavier currencies. Like the drop can be pretty
yeah,
stark.
it's really hard, right? Like, and it's
Mm,
how do you make it simpler? How do
mm,
you just like have an awareness? I think knowledge is power.
mm,
But then yeah, like it's a very complex situation, so it's hard to it's probably irrational for most people to lose sleep over it, because their biggest impact might be taking that right next opportunity, building up their business, getting the next 5 customers, getting the next 10
mm,
customers, whatever it is.
mm,
And I think that's where the Buffett Munger style still works, even though we're entering the era where the velocity of money and the velocity of asset transfer may be increasing.
yeah.
And of course, we have a debasement of currency.
Mm,
And Buffett is one of the biggest holders of all of that debt.
yeah. Yeah.
So it's an interesting space for him. But I think like those strong principles around like I think building your
Mm,
own kind of cash flows and your almost like uncorrelated
mm,
protection within your household.
mm, yeah.
It's become
Yeah.
very popular, and you've seen that with the emergence through COVID of fractional working, and
Mm,
how a lot of people these days are both straddling that line between
mm,
wages and equity ownership.
mm, yeah. I just a comment on the way people are straddling this in again my work as an advisor and conversations with individuals. There seems to be a tendency, and this is totally understandable. We all do it. I do it. We like to take risk based on our collective circles, and
Mm,
so very often we and a prime example of this is like basing all your assets in your national currency because everyone around you is talking about it in the same way. Like my house went
right.
up 10%, and it's fine if the New Zealand dollar, sunk by 20%.
Yeah.
But
Yeah.
and I feel like as advisors, it's important to surface that, or if you're being more harsh, like call that out, because ultimately it's your goal with your wealth is to help yourself and your loved ones transition through these troubled times.
Right.
But there seems to be a lot of comfort among people to reside in this collective
Status quo.
risk, yeah, status quo, because
Well,
yeah, if the New Zealand dollar sinks, like we're all in it, and that's
yeah,
fine.
that's right.
And so I do think that's part of the advisor's role there in surfacing these risks, but also helping individuals understand and articulate this risk to themselves.
Mm,
Because I think most people, when they understand it and articulate it, make that uh, rational choice, if I were to
yeah.
call it that. Um, but without that support, people tend to drift towards what the crowd is more accepting of, because you don't want to stand out in the crowd if that risk goes wrong,
Yeah.
right? Yeah.
So I don't know if you're a fan of Howard Marks, but Howard Marks is a great bond investor, one of the best
Mm-hmm.
distressed bond investors in the world, and has built an amazing business that he recently actually I think got acquired as well. But he still runs it, and they have a very good brand, Oak Tree, and he's been
Mm,
writing memos now for 30 years or whatever.
mm,
And he talked about this concept of he had a memo called "I Beg to Differ," and it
mm,
talked about the fact that at the end of the day, if you want alpha, if you want excess returns, you have
mm.
to be different.
Yeah.
And the problem with being different is, especially in a wealth management context, is
Mm,
by being different, you are creating career risk.
Yeah.
It's much easier if we all sit in the S&P 500, and you've kind of seen that in New
Mm.
Zealand through the KiwiSaver regime, right?
Mm.
Is that
Mm.
there are more and more S&P 500-esque or S&P 500 correlated
Mm.
portfolios
Yeah.
that are propping up, and you know, when you look at under the hood, you go, well, they're all pretty similar.
Mm.
There's a very high correlation there,
Mm.
and I think that also goes back to our conversation around what is the market, right? And I
Mm.
think a lot of people think of the market as the S&P 500, and
Mm.
the S&P 500 is not the market
Mm-hmm.
because it doesn't include the bond market, it doesn't include
Mm.
digital assets, it doesn't include
Mm. Mm.
it doesn't include private credit, it
Yeah.
doesn't include global equities. You know, there's
Or
all
your
these
neighborhood coffee shop.
blind spots. Yeah, for sure,
Yeah. Yeah.
totally.
Yeah.
Um, but I guess Web3 has now kind of created this idea that you can have patron ownership, or you know, the post-labor economic kind of environment where
Mm-hmm.
you could build grassroots ownership at scale is kind of
Mm-hmm.
how I think about blockchain.
Mm-hmm.
uh, I guess similar to you, I go when people go, and I ask myself this a lot as well when I go about Bitcoin, and I ask myself, I just accept the fact that there is a possibility that Bitcoin is the tulips of our era, but at the same time, there is clear evidence to show that it is also undermining the current financial system in many
Mm.
ways, and that adoption is clear.
Mm. Mm.
So, and I think the two things can be true at once.
Yeah.
So, I mean, I guess to kind of, you know, to kind of
Mm.
go deeper into that, I would go, you know, like, yeah, I guess, how do you see the good parts of blockchain and Web3 and where it's working and
Mm-hmm.
where it's actually genuinely creating and
Mm.
disrupting like
Mm.
the current economic regime, and where
Mm.
actually there's fragility?
Mm. Um, yeah, a lot of thoughts on that. I think of Bitcoin as the Wright brothers model for the airplane. It was janky and just about flew, but we're not. You're not going to take that on a flight across the Atlantic. Like the chances are you wouldn't make it, right? Like that first design for an airplane.
Mm.
Um, Unfortunately, we're locked into that design, or at least like most Bitcoin holders are locked into the design because that's what's been adopted. And so Bitcoin's kind of become, sort of this fetishistic symbol of what this new world represents. I don't mean that in a derogatory way. I think in that sense, it is like that first flare, if you were, of like what is possible. And post that with Ethereum and a bunch of other blockchain projects, I think there's some fantastic infrastructure that's being built through smart contracts, DeFi, infrastructure as well. Like as someone who ran a trading desk, 60 to 70% of our costs and our team were just operations. And that's because, my hot take, it's just a hot take, is that most of Wall Street finance still runs on Microsoft Excel, right? And 90s IT. And a lot of that could be replaced. So if you ask me, like, what is the use case for blockchain and Web, like, I think the use case is there. Like, you could have extremely efficient exchanges and platforms out there that just run on smart code with DeFi infrastructure,
Mm.
and I use DeFi infrastructure actively. It's phenomenal. I would have loved to, we could have had a significantly slimmer trading desk. It's just the way regulations work, the way licenses work, the incumbents can kind of protect and build moats around their businesses to prevent these kids with their memes from coming in. And so in that sense, you do see, newer signs of things like Dogecoin, etc., which are more, what's the word? Almost,
Well,
like
they're
this.
mimetic. They're a meme.
Yeah, yeah, meme culture, almost subversive, and people tend to use that to deconstruct Web3. But I think that's more, kids with their memes at play. I do think we have significantly robust payment and monetary infrastructure built through Web3. A key important factor that's holding it back from really significantly changing the way we coordinate is socio-cultural infrastructure, because one of the most important aspects of distributed finance is it's, I mean, in its word, it's distributed, so there's no enforcement mechanisms,
Yeah.
and so it's almost like, living in jelly or jello if you're American. It's this ever expanding universe, and so in order to interact in a more distributed space, I've always believed monetary currencies are a derivative of reputational or social currencies. And so
Yeah.
you will see a paradigm where your credit limits will be a function of whatever social cultural standing you
Mm.
might have in networks or in communities. And that sort of infrastructure is coming up through peer-to-peer technology, obviously, that I've also been part of and been very enthusiastic about. Some of that is extremely hard technologically to get right, which is what's taken a while, and which is why I think this transition towards this informational era that I speak about is a longer arc. And so, as individuals navigating this era, I call it a transition period because a big chunk of your wealth is in traditional assets. But how do you equip it so that you can transition and start wading into these waters as they become more robust and worthy of your resources? That to me feels really critical and important about this time that we live in. Um,
Mm.
and yeah, I can expand on that if
Mm.
needed.
Yeah, no, it's cool. Would you say that the biggest win has been the 360 on stables, and do you think there are any weaknesses and holes within that are going to be uncovered over the coming years?
Yeah, it's so interesting because I've used tables for treasury management operations. I think it's remarkably efficient, especially for distributed teams,
Yeah.
especially for running governance. I've also been part of that battle between USDC and USDT,
Mm.
thinking USDC is more stable because it's more regulated. But then back in 2022, was it, or early 2023, you had the big blowout because turned out USDC had invested a big chunk of their treasury in Silicon Valley Bank, which went down overnight.
Mm.
And I literally had sleepless nights that weekend until it was bailed out. And so you kind of realize, like, stables as murky as they are, like USDT, probably have security in the fact that they are so widely adopted, they can't go down. And so another, aspect of some of the newer conversation around stables has been not that big in my mind because I feel like they're already solved for, and I can't see
Mm.
regulations make that big of a dent. Um, and so I honestly think, yeah, it's a great innovation. It's if anything, you might see more banks moving that way towards making settlements easier, but I don't think they're incentivized to do so because like a lot of the delays and the friction in payments is related to KYC, AML, and more importantly, their licenses that they hold as institutions. And so again, it's not a technological or rational answer there. It's more, pragmatic. We live in a world with a whole complexity of regulations around it that prevent true transparency and frictionless operation. So
And
that's
margin,
my other.
and margin, right?
Yeah,
Ultimately, the
yeah,
delay the delay in your transfer is their margin,
yeah, absolutely. Like
because
they
they're
get
earning
us
on that.
absolutely, and I don't think people want to let go of that anytime soon.
Yep.
So,
I mean, we've definitely discussed with people and on the podcast that, ultimately in a market, if you want to see change and you don't like banks,
mm,
and banks are obviously something that people complain about, but people still use
mm,
and trust.
mm,
So, like, I think this is kind of like, well, if you want to see change, you probably have to start changing your consumer behavior, like your habits, your purchasing habits,
mm,
which
mm,
means you have to, if you want to see change, you have to move away from the known
yeah,
to a degree. Um, but perhaps uh, the consumer is ultimately going, well, better the devil I know, which is the
yeah,
banks when they're just it's fine that they're taking all this excess margin because governments will never let them fail. But
Yeah.
look at a decentralized system. You're kind of on your own, right? You're
Yeah.
playing on
Yeah.
hard mode, or it's like
Yeah. Yeah.
hardcore in Diablo or something. So
Yeah. Yeah.
it's an interesting regime we live in. What do you think
Mm.
the best place for people to just start understanding decentralized finance in a way where um, it isn't overwhelming, it's not multiple hours of, is there any
Mm.
content or anything that's like 5 to 12 minutes of like engagement to understand some aspect of
Mm.
of
Yeah.
blockchain and Web3?
I actually think some of the LLMs do a good job, like just pop into ChatGPT and
Yeah,
ask your
right.
questions, and I think many of them are all over this in that sense, like they provide good answers. To your question, like it's a function of how deep you want to go into this.
Mm.
If you're mostly looking to get some kind of exposure, like I would say start with an amount just on a regular wallet or platform where you literally don't care if you lose it, but it just gets you more
Mm.
comfortable with the notion of it. If you want to go into it a little more, there's a whole bunch of decentralized finance platforms, exchanges. Again, that ChatGPT could point you towards. Yeah, you
Yeah,
go.
I guess as well, it's like it's kind of, it's beyond the, hey, I got this thing, I had this wallet, it was really actually frictionless. Like using DeFi actually to get a wallet going is actually very easy,
Mm,
right? Like it's like, oh, that's
mm,
actually, it almost feels too easy.
mm.
Many of these platforms are right, they're like, it's like almost
Yeah,
instant to set
yeah.
something up. But it's like, how do I get conviction on this beyond, oh, well, I paid some DeFi platform some transaction fees to now hold a little bit of USDC or a meme coin or
Mm,
some sort of
mm,
project. Like, how do I start to build conviction in it beyond the kind of, not necessarily speculating, but beyond
mm.
holding something and waiting? You know what I mean?
Yeah, I know what you mean because I encounter these questions all the time with my family and in-laws or even friends. I've stopped being as much of a maximalist because I understand again that it's much deeper than how do I invest in this. I think it's like a whole worldviews collision that's occurring here. And
Yes.
I would actually invite people to dive into that because that's so interesting. Because I've had people say to me like, I can't invest in crypto. I only invest in businesses. And to me, Ethereum is one of the most efficient businesses you
Well,
can
it is a
find there.
business. I
Yeah, and the
I
most
often say
efficient. Like the
you have to
yeah,
compare it to almost a Visa or a Mastercard or a
yeah,
Steam even,
yeah,
something like
yeah,
that, right?
yeah,
Like you say, I think you do have to have.
yeah.
My view is that all of the networks are essentially businesses, and actually you could take some of their metrics and you could
Mm,
apply them to business valuations that are
yeah,
traditional. Now,
yeah,
you might get a result that you don't like, right? Because if
yeah,
you took a lot of these networks on a price to sales basis,
yeah,
you would go, wow, I'm paying a lot in the future for returns.
yeah,
Um, but,
yeah.
it is possible.
It is possible. I would also say with the traditional brick and mortar businesses, you're living in times where, something that stood for 100 years could get wiped out with AI models. And so there's equal levels of uncertainty there. There's more like there's lesser risk in terms of standing out in the crowd because everyone would be shocked if a large institution went down, and so you have this
Mm.
shared sense of like, oh, I'm not the only foolish one, and I think that's an interesting exploration for people. I do want to call out like what where DeFi and crypto has lacked is that transition or like seeping into the more tangible local aspects of our lives, like technically using P2P or Web3 infrastructure, we should be able to lend money to our local coffee shop or fruit and veg,
Mm.
or a local entrepreneur in a transparent way. And I think, especially for your audience or for people, who are part of the investor community, like honestly, that's what gets the juices going for a whole bunch of people, like the excitement at seeing your investment making that tangible impact, like whether it's a local business or an entrepreneur who's made the leap. And I think that should fall into place, or we should see it fall into place over the rest of this decade, over the next 5 years or so. And I feel like people often get put off by just how anonymous crypto can be. Like you're
Yeah.
operating on Sushi Swap and you have no idea what it is and
Mm.
what's going on there. And I do think that is a failing.
Yeah, right.
But my argument there is we should start seeing this infrastructure play into more tangible ways where, yeah, I gave a $5,000 loan to my local business, and these are the payment records, and their default is actually registered on a chain, which impacts them, and creates this
Mm.
social infrastructure for good behavior.
Mm.
And I feel like that's been a big missing piece in crypto, DeFi, Web3,
Mm.
and I would say to investors who are more inclined towards that, that nows of like sniffing out who, what good businesses are, who the good entrepreneurs are, like that presents a very good window that's opening up, and might actually interest a few people there who tend to be motivated by that kind of capital
Mm.
flow.
Mm.
Yeah.
Yeah, cool. Awesome. Well, thank you for taking the time today. I feel like we could speak for hours. Maybe we should have you on another episode in the new year. That'd be really cool.
Yeah.
But yeah, thanks for
Cool.
taking the time today. I've really appreciated it. Thank you so much.
Likewise. Thanks, Charlie.